All right, welcome everyone to Daily Rates Live with the Mortgage Calculator. We'll wait a few minutes here to get started. We are streaming live on YouTube, Facebook, LinkedIn. So just give us a few minutes to get connected, and then we'll get into the show. Today we will be talking about conventional loan programs. Definitely some good momentum in the market as rates have kind of turned a corner here. So we can now look back into these programs. Good morning, Owen and Warren. If anybody has any questions, they can drop them in the chat here, or any comments. We'll have it up here for a minute, and then we'll bring it back up at the end if anybody wants to ask a question. All right, looks like we are live on most of the platforms, so we'll go ahead and start. I'm monitoring to take the chat off the screen, but if you have any questions, please drop them in there and we will bring them back up. Welcome everyone, my name is Nick Hershey. I am the president of the Mortgage Calculator. We are a correspondent lender that specializes in non-QM loans, but today we're going to take it back to the basics, back to conventional loan programs. Now that the rates have kind of turned a corner here, we have a chance to explore more of the traditional programs that have been a little bit priced out of some buyers' budgets. So we'll go ahead and check out the live rates as we do every morning. And then we'll have Jose Gonzalez, our sales manager with 28 years of experience, go through some of the basic conventional loan programs and show the changes that have occurred that maybe weren't quite as feasible before. So as we do every morning, let's go ahead and check out the general markets here. I will change my screen quickly and we will get started. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR for today. It is November 7th, just after 11 a.m. Eastern, so most of our standard programs have live rates issued already. So we will set up a basic scenario here so we can compare across the different programs. If you'd like a full loan estimate with all of the fees itemized out that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary homes. So for our demo, we will set up a scenario here for our 400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment, and we'll search for the absolute lowest rates we can offer at the moment. On our programs, we'll start with conforming conventional, and then we'll go into FHA, which is usually the second option for most borrowers. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs most other banks or lenders don't offer. We also have VA and USDA. VA is only for eligible vets and active service members. If you are eligible, just let us know. We'd be happy to quote it up. And USD is only for eligible properties. So if you are shopping in one of those areas, just let us know, and we can quote that program as well. For the demo, we will start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. For all the demos, we'll use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, let's check out the conventional rates, which Jose will be breaking down later into more detail. So best option this morning at the moment, 7% rate, 2.5 discount points in cost, puts the final APR at 7.217. So that's for our basic conventional conforming programs. So Jose will break down some different variations here under the conventional umbrella. But if there's any reason our customer has any trouble qualifying for the standard conventional programs, Typically, the next option we want to look at here is an FHA program. So we'll set up the same exact scenario, and this time we'll set up FHA as the option. Everything will stay exactly the same. However, FHA does allow a little more leniency on credit issues as well as a much higher debt to income ratio, but we'll keep everything exactly the same so we can compare the APR apples to apples here across the programs. So for FHA this morning, looks like it went up a touch from yesterday, 6.375 rate with a 2.25 discount points in cost, puts our final APR at 7.010 here for FHA. And you saw the conventional was at 7.2 something. So actually, if our customer qualifies for both, as has been the case recently, FHA might actually be a little cheaper. So those customers that qualify for both, definitely don't overlook the FHA options. And the customers that must use FHA, definitely some pleasant changes that have happened to the MI. That is what is included here in the APR. Includes all the upfront and yearly mortgage insurance required on FHA. Now, if for any reason our customer can't qualify for either program, that's where we love to help. Many other banks or lenders will have to deny that customer, unfortunately, but that's where we have over 5,000 additional options here under expanded guidelines, also known as non-QM. So when we select this option, we'll keep everything else the same. However, we have a new option pop up for income. So full doc is 2 years of tax returns. That's what we have to use for FHA. For conventional, what most people are used to. So we'll typically choose this non-QM option to take advantage of one of these others if our customer doesn't qualify full doc. So we could try asset related, business bank statements. The investor programs are just for investment properties, so we'll talk about those in a minute. Personal bank statement, 12-month is typically the most popular. We also have RSU, stated, VOE, 1099, P&L, all kinds of different options to try for our borrowers. Most popular for our demo here is going to be the personal bank statement 12-month, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, for various reasons, may have write-offs on their tax returns, or just may need a little bit of help with a little bit of extra income. So instead of using their tax returns, we will use just their last 12 bank statements, no tax returns at all, to determine a debt to income ratio of 40% in this example, using just the cash in the bank. So many times our self-employed borrowers qualify for much more income and can therefore get the home they really want. So let's check out the bank statement options this morning. All right, cool. So can't always present this program because it's sometimes a little too expensive to present, but it's fine today. 7.5 rate here for 3 discount points and costs. It's the final APR at 7.633 here. And then some of the more standard options as you scroll down are at a little bit higher rates and costs. So you see we have dozens of different versions of these bank statement programs. Some of these may allow bankruptcies, foreclosures at a little bit higher rates and costs. Some of these may allow a little bit variation in the way we can calculate the income. So tons of different options here. Please get with our team to find the best ones. That one on the top is pretty amazing though. And now, before we get into Jose's examples, we always do live pricing for investment properties. So we'll switch gears here for a minute to investment property occupancy. We'll set up the same scenario, 400,000 loan amount, 80% loan to value, 20% down payment. And we'll search for the absolute lowest rates we can offer at the moment. And we will compare conforming conventional to expanded guidelines, also known as non-QM. Remember, government programs like FHA, VA, and USDA do not work for investments. So we'll start with conforming conventional. We'll keep everything the same as our other demos. All we've changed here is the occupancy to investment. So we can see the adjustments conventional has here on investment properties. So before, these were a little bit crazy, but thankfully with some of the recent news, the conventional programs have relaxed a little bit. So these are actually semi-viable here. 7.499 rate for 3.5 discount points and costs puts the final APR at 7.749. So great option for our customers qualify full doc. And you see here, hidden down here at number 3, is our portfolio option. For the last few weeks, this was number 1 by a long shot because it's not your traditional conventional program. It's a portfolio program, uses the same guidelines. However, it doesn't actually go to Fannie Mae or Freddie Mac here. So this is a good option. This will continue to compete with our conventional investments. However, today the traditional ones do beat it by a little bit here, but definitely one to look out for, because for the last 2 weeks it's been definitely first place by quite a bit. Now, if for any reason our customer wants to see other options, we always want to present some non-QM investment property options, especially because recently the conventional options were a little bit crazy. Now they are feasible, so now we really want to take a close look and compare conforming to expanded guidelines, also known as non-QM here. So for non-QM, the first thing we need to select is our income option. The most popular income for an investment is going to be the DSCR. No income needed from our borrower, no employment needed from our borrower, no documentation on that needed from our borrower. We're simply going to use the property income to determine a DSCR ratio. It stands for debt service coverage ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1.0 or higher. If the property does not quite cash flow on a monthly basis, that's a ratio under 1. For our demo, we always use 1.5 so that all the programs show up, but we do have options for under 1 as well. So, where's my prepay at here? For some reason, the prepay didn't pop up, so needed to change back to investment. Prepayment penalty is standard on these investment non-QM programs, so we always choose 3 years for our demo. We can choose 0, that will limit what shows up and cost more. We can also choose 5 years, which will limit what programs show up, but does save our borrower some money. 3 years is pretty standard, so that will show the most amount of programs here. So let's check out the DSCR options. All right, conventional beating DSCR. I think today's the first day in a couple weeks here, so that's pretty cool. But DSCR, I would still say 95+% of investors, even when DSCR is quite a bit more expensive, will choose a DSCR program for the flexibility. So here it's almost identical. I'd say 100% of investors would choose this if they had the choice. 7.75 rate, 3.25 discount points and costs, final APR 7.892, which is about 0.1 higher than conventional, for a ton of extra benefits there. With the DSCR, no income, no employment. You can do 1, 2, 5, 10 loans at a time. A lot of flexibility afforded there, and close in an LLC, all kinds of different benefits. And if we scroll down here, there's a lot of programs, some at quite a bit higher rates and costs here towards the bottom. May allow bankruptcies, foreclosures, also may allow us to use short-term rental income calculations, all kinds of flexibility here within the DSCR programs. So please get with our team to check those out. And now let me switch my screen again. And we'll get into today's topic for Jose, our sales manager with 28 years of experience. Always breaks down a topic for us. Today we're going to take it back to the basics, since rates have definitely improved in the last few weeks from a lot of programs being not feasible. As you've seen on the live show, I've often been presenting portfolio programs and other programs that are a little bit outside the box, but we'll bring it back now to the basics of conventional loans, since a lot of our borrowers that were kind of on the fence as rates were peaking are now starting to check out these programs. So as rates hopefully continue to go down, we will definitely see more of the standard programs back. Some programs were suspended as rates were volatile and such. So definitely something that has been on our radar. And now that the markets have changed, we'll definitely look back into these. So Jose, if you're ready, let's go ahead and check out some examples here for conventional.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Today's show, very exciting news. We're getting some positive movement there. No more knee-jerk reactions. Markets are stabilizing, so we are getting a little bit more predictability in what we can choose here. So Um, Conventional loans have had some recent updates, which I'm going to share with you today, regarding 2 to 4 units and also 3% down options. So let me jump right into it right here because I got quite a few purchase and refi options to share with you. So today's theme is conventional loans, but I am going to state that we are throwing a little bit of a twist in some of our options here because we do have, I don't know, I guess if I'd call it a hybrid type program, which Nick has brought up a few times now, especially with the investment properties that does use automated underwriting and does use Fannie Mae guidelines to review and underwrite, but does not have the same loan level price adjustments that Fannie and Freddie have when it comes to investment properties. So we are going to see a few of those items today. So our first option is our 97% LTV conventional loan. In this case, this is Freddie Mac Home Ready. Fannie has the Home Possible. Very similar programs, but not exactly the same, right? The Home Ready is a little bit more lenient, for example, with manufactured homes and ADUs, right? So if you do have any loans with manufactured homes or ADUs, you should probably look at the guidelines a little deeper to see where you can benefit going with Freddie versus Fannie. Here, the home ready options. Now, one thing I do want to state the home ready and home possible options are income restricted programs. They are based on a borrower that makes no more than 80% of the area median income, unless the census tract is a minority census tract or a low to moderate income census tract, in which case the income restrictions are removed to spur more economic activity for that area. These programs do have reduced rates, as you will see, and reduced MI. So in this case, I went ahead and even picked some of the lender credit options because typically our 3% down option borrower is going to be a little bit strapped for cash. Oh, and one other thing I wanted to note about this program, a common misconception of Home Possible and Home Ready is that they are only for first time home buyers. That is not always the case. So I would definitely recommend that you review the guidelines for your particular borrower to see if they will qualify. It's really more about the income aiding the low to moderate income borrower, not just necessarily the first time home buyer with these programs. So we are looking at 8.125 lowest cost option, which has a lender credit of 1.125% or $5,456, and you can buy it down all the way to 6.75% at a cost of 2.375. That's our 97% home ready option. So now we have another 97% LTV option, which does not have an income restriction. This is Freddie Mac's Home One, not Home Run, but Home One product, right? So this is a 97% LTV, does have reduced rates also, as you can see, but key to this one, it does not have income restrictions. No need to be at or below 80% of the area median income. And now another conventional option is just our standard 5% down 1 unit purchase. So you'll see rates go up a little bit here, but we still have 7.875 with a little bit of a lender credit, and you can buy that down to 6.99%. So really getting some good improvements there. And this is for, again, primary. This is for a primary, 5%. Now, I did promise you all some twists, right? Well, here's one of them. our 95% LTV 2 to 4 unit primary conventional purchase. Yes, you heard me correct. 95% LTV all the way up to a 4 unit property. This one here I priced as a 4 unit just in case there were any differences there. And you do see obviously a little bit higher rate, but remember, rate is associated with risk. So here, 8.5% is your lowest cost option, and you can buy that down all the way to 7.25% for our 2 to 4 unit primary house hacker special. And now we have another option. The Home Possible and Home Ready programs have already been allowing 2 to 4 unit properties without any loan level price adjustment. However, they do limit the LTV max to 95%, no 97% possible with the 2 to 4 unit, but still look at these rates compared to our other option on the primary 2 to 4 unit non home possible. Look at that. You can get lender credits of $8,000 at 8.625%. So you're making up some of that extra down payment you had to give, and you can buy that down all the way to 6.75%. Pretty amazing here for our home possible 2 to 4 unit property. And again, when you are pre-approving your borrowers or getting pre-approved, remember for these low LTV options, don't just offer them FHA pre-approvals. Also offer them a conventional pre-approval so they can see which option works best in their market. You can definitely get some guidance from their real estate professional. So now we're going with some investment property options, 80% LTV, 1 unit. We're looking at not too many options here. 8.124 lowest cost option, 7.99 lowest rate option. Now 75% LTV for our 2 to 4 unit standard option, right? So no home possible here or anything like that. This is investment. You're looking at 8.125 lowest cost option, 7.499 lowest rate option. And now 1 unit primary conventional cash out refinance. 80% is the maximum LTV, and 7.99 is our lowest rate option, and 7.25 lowest cost option. And our 80% LTV investment conventional cash out. Now, this is using our program here that uses automated underwriting, but it's not a true Fannie or Freddie
So that's the
purchase program.
portfolio option there, huh?
Yes, sir.
Cool.
This is an amazing product because look at that LTV on that, right? Investment on top of that, 80%. It's not a typo. It's correct. Obviously, rates a little higher, 9%, and you can buy that down to 8.25%. But if you're looking for that maximum LTV and not going non QM, this is your option.
Even though it's technically non-QM, it's like a
Yeah,
in between.
yeah. I mean, if you don't consider it non QM because of the automated underwriting, but in every other sense of the word, it's not an agency loan. It's their portfolio loan. So, and we love it. And now, same loan for a 2 to 4 unit, and they give you the same rate. They just give you a little bit of a hit there. So 9%. No, actually, no, same rate all the way across. 9%, quarter point, and you can buy that down to 7.875 conventional, 80% primary conventional. That's why actually they didn't give you the hit. This is primary. Hold up a second. And this one is investment. But this is one unit, and now this is our 2 to 4 unit primary conventional cash out. Still can take it to 80%. Pretty good rates there. Now, when we do go cash out on this one, there is an LTV hit on our investment 2 to 4 unit, right? So we're at 75% LTV, but still good. And this is again using the portfolio product. Automated underwriting is used full doc, but due to not being limited by loan level price adjustments by Fannie or Freddie, we were able to get compliant pricing at 9% all the way down to 8.25. That's because they don't have that 2.5 to 3 point hit that Fannie and Freddie have. And this is actually our last option here for our cash outs. I was saving the best for last. So uh, many options out there. Don't leave no stone unturned. You see, if we were just staying with the basic cookie cutter options, we would be telling our investors, "Oh, I'm sorry, I don't have anything for you at 75% for your 4 unit cash out." But we do. Here it is, and we have it, and it's very good pricing on that.
All right. Thank you, sir. Don't see any specific questions. If anybody's got a question, please drop it in there quickly before we wrap it up. But definitely some good changes to conventional. Before, a lot of the cash out options were not really feasible. A lot of the investment options, especially investment cash out, not really feasible, right? Just with the way the markets were. So now that's why we did the show today. As Jose presented, all the options are on the table, and we even have some of those hybrid portfolio options that kind of fill in the gaps there where we may need some extra action. So definitely scour the guidelines there, team. Definitely look for those little nuggets like Jose found within the conventional programs. And since there's no questions, I guess we'll wrap it up. So thanks everybody for tuning in. We do this show every morning, 11 a.m. Eastern, go over the live rates, talk about a specific topic. So thank you for joining us today. And we'll be back tomorrow, 11 a.m. Eastern, for some more live rates. Thanks, everybody.
Thank you, everybody. Have a great day.